Welcome to the deep dive. This is where we take, well, your research, your notes, all that information you've gathered, and we really boil it down.
Get to the core of it.
Exactly. And today, our mission is pretty straightforward. We want to give you a real shortcut to understanding a super important and honestly fast-moving financial trend. We're talking about the global cash advance services market.
Yeah.
And we're not just going to read numbers. We want to dive into the why. What does this mean for people, for businesses all around the world? You might actually be surprised by some of what's driving this growth and how it's, well, fundamentally changing how we get access to short-term money.
And it really is relevant, isn't it? Because it touches on these bigger ideas, things like financial access, how economies are handling this need for quick cash.
Right.
And even, financial stability in general. Things are changing fast. So this deep dive, using your material, should really shed some light on those connections.
Okay, let's unpack the global scale first.
Yeah.
Because the numbers themselves from the sources, they really set the scene.
They do.
So back in 2021, the whole market globally was valued at just over, $41 billion?
$41.5 billion, yeah.
And then just a few years later, looking at 2025, that estimate jumps to over $55 billion.
Quite a leap in a short time.
It is. But the really eye-opening number is the projection for 2033. The sources are pointing towards almost $98 billion.
Wow, nearly double the 2021 figure.
Exactly. And that works out to a compound annual growth rate, a CAGR of about 7.4%.
A solid 7.4%. Consistent growth.
So those are big numbers, but what's actually driving that? It's not just happening randomly, right?
No, absolutely not. What your sources really highlight is it's less about just numbers and more about a real shift in, how people manage their money day to day.
Okay.
We're seeing this convergence of a few key things. Much wider digital financial inclusion.
So more people using online banking, apps, that sort of thing.
Precisely. Then there's the very real, often urgent demand for short-term liquidity. People need cash quickly sometimes.
Yeah, unexpected expenses pop up.
Exactly. And consumer behavior is just evolving rapidly.
Yeah.
Think about it. There's always some economic uncertainty, right?
Sure.
Combine that with how much we rely on digital convenience now, mobile banking, instant transfers. It just feeds this trend. People need funds now.
For a bill or maybe bridging the gap till payday?
Or even a small business needing some quick working capital.
Yeah.
Cash advances are stepping in where maybe traditional credit isn't fast enough or easy enough to get.
That makes a lot of sense. So, okay, if that's the global picture, let's zoom in a bit. The growth isn't the same everywhere, is it? The regional differences sound pretty insightful.
Definitely not uniform. Looking region by region tells different stories.
Let's start with North America. It holds a pretty substantial chunk of this market.
A major player.
The sources show the region growing from around $14.6 billion back in 2021, projected to hit nearly $33 billion by 2033. That's keeping a solid CAGR just over 7%.
And within North America, no surprise, the U.S. is the dominant force there, accounts for the biggest slice.
Yeah.
Its market is forecast to hit over $26.5 billion by 2033, up from about $12 billion. But, it's quite interesting is how Canada seems to be growing faster.
That is interesting. Our sources show Canada with a stronger growth rate, almost 8.7% CAGR.
Yeah, 8.7 versus about 6.7 for the U.S.
So Canada goes from roughly $2 billion in 2021 up to $5.5 billion projected for 2033. Mexico, meanwhile, is showing more modest growth, around 5.2%.
Right.
So why the difference? Why is Canada, growing faster in percentage terms than the huge U.S. market next door?
That's a really good question, and the sources offer some clues. It seems less about demand suddenly surging more in Canada, and maybe more about the financial environment itself.
How so?
Well, think about fintech adoption. The sources suggest Canada's regulatory scene, while obviously robust, might have been a bit quicker, perhaps more flexible in embracing digital lending platforms compared to the U.S.
So maybe fostering that innovation a bit more easily.
Something like that, creating an ecosystem where these quick access services could integrate and, maybe reach people more efficiently. So it's potentially more about the infrastructure enabling that faster percentage growth.
Got it. That's a key distinction. Okay, let's move across the Atlantic. Europe, also seeing significant growth rate, expected to go from nearly $12 billion in 2021 to over $26 billion by 2033.
Yeah, that's a CAGR of almost 6.9%. So still very healthy growth.
And who are the big players there?
Well, you've got the major economies, naturally. Germany growing from about $2.2 billion to nearly $4.9 billion. France, 1.7 up to nearly $4 billion. Italy from 1.2 up to almost $3 billion.
Okay.
But what's also interesting, digging into your sources, is that Russia and Spain are showing even stronger rates of growth, like 7.9% for Russia, 7.8% for Spain.
Higher than the regional average then. And you've also got smaller markets like
Right.
Sweden, Denmark growing steadily, but then a slower rest of Europe.
Right. So there's definitely variation within the continent.
So if we connect that back to the bigger picture, what do these different growth rates tell us about Europe's, well, diverse financial situation?
It's fascinating, really. Europe isn't just one single market, is it?
Oh,
The sources seem to indicate that countries like Russia and Spain, despite, very different economic contexts, might share something.
mm,
Maybe a population that's getting comfortable with digital finance really quickly,
okay.
and potentially, in some cases, maybe less access to traditional immediate credit compared to places like Germany or Switzerland.
So these cash advance services are filling a specific gap there.
Exactly. Filling that short-term liquidity gap, especially for, unexpected costs or maybe small business needs. It seems to capitalize on changing habits and perhaps a less saturated traditional market in some spots.
Right, okay. Now, Asia Pacific, this is where the sources say things get really interesting.
Yeah, this region is showing some serious momentum.
An impressive 8.2% CAGR overall, growing from just under 10 billion in 2021, projected to hit over 25.5 billion by 2033.
A huge jump.
Yeah.
And China, of course, being the regional heavyweight, makes up a big part of that, going from 3.4 billion up to nearly 8.5 billion.
Makes sense.
Japan also shows solid growth, from 1.7 billion to over 4.1 billion. But the sources really put a spotlight on India, don't they?
They absolutely do. India is flagged as a major growth hub. It has the highest NGR in the whole region, over 10%.
10% is huge.
Projected to grow from about 1.5 billion in 2021 to almost 4.9 billion by 2033. And then you also see South Korea, Australia, Singapore all growing strongly, over 7.7%. Singapore stands out too, almost 9% CAGR.
Singapore's very strong.
So this raises that question again. What's enabling India and Singapore specifically to post such standout growth figures in such a dynamic region?
Yeah, it's a great question, and the sources seem pretty clear. For India, it looks like a perfect storm.
Okay.
You've got rapid expansion of digital infrastructure, think mobile payments, UPI. It's massive there. Combine that with a huge young population, it's very comfortable with digital tech.
Digitally native.
Exactly. And many are maybe accessing formal financial services for the first time. Traditional banks might be slow or just not accessible. So cash advances through apps, they provide that vital instant cash for daily life.
So accessibility is key there. What about Singapore? Different story.
Very different, yes. Singapore is already a highly advanced digital economy, very sophisticated fintech scene. The sources suggest its approach, maybe regulatory sandboxes, things like that, has really encouraged innovation in digital lending.
Ah, okay.
It's allowed cash advance services to scale quickly, serving both individuals and the agile needs of its many small and medium-sized businesses.
Two very different paths to high growth. Fascinating. Okay, let's turn to South America now. Also showing solid expansion, the sources say, moving from about 2.3 billion in 2021 up to nearly 5.8 billion by 2033.
That's a strong CAGR too, over 8% for the region.
And Brazil is the big player there.
Brazil's the regional powerhouse, yeah. Growing from just under a billion to over 2.5 billion.
But again, there are some standouts in terms of growth rate. Argentina and Colombia are showing exceptional growth, over 9% for Argentina, 8.6% for Colombia.
Really high rates.
While others like Peru, Chile are mostly in that 7-8% range. What's driving those really high numbers in Argentina and Colombia? What does that tell us?
Well, the sources seem to link these surges to a couple of things. Both countries have seen, significant economic shifts and volatility at times.
Right.
And in those situations, getting instant access to funds becomes absolutely critical for just day-to-day stability. Plus, we're seeing much higher reliance on mobile financial tools there.
Leapfrogging traditional banking sometimes.
Often, yes.
Yeah.
Especially for parts of the population where traditional banks might be harder to access. And don't forget, the gig economy, it's booming in many parts of South America. Those workers often need immediate advances against what they've earned.
And these services provide that directly.
Exactly. It really shows how this market adapts to very specific, sometimes acute needs for cash in economies that are changing fast.
Okay, that makes sense. Now, the Middle East, also described as having a robust climb. From about 1.2 billion in 2021 up to over 3.3 billion by 2033. That's a strong 8.5% CAGR.
Another high-growth region, definitely.
Boy.
Key contributors there include Saudi Arabia going from about 0.4 billion to over a billion, Turkey, 0.24 billion up to over 0.65 billion.
And the UAE stands out again.
Yes, the UAE is flagged as a particularly high-growth market, over 9% CAGR there, moving from just under $0.2 billion to well over $500 million by 2033.
So the sources talk about digital penetration and evolving financial ecosystems being really impactful there. How so?
Well, it seems many countries in the Middle East are really pushing digital transformation, right? Smart city projects, things like that.
True, lots of investment there.
That naturally creates fertile ground for digital financial services. You've got a young, tech-savvy population. Very high smartphone use makes these digital cash advance platforms super accessible.
And easy to adopt.
Plus, think about the large expat populations in some of these countries. They often need to manage finances across borders or need short-term cash infusions. These services are really useful for them. So it's a region where quick digital finance isn't just nice to have, it's becoming essential.
Got it. Okay, finally, let's round this out with Africa. The market there is expected to grow from around 1.6 billion in 2021 to about 3.8 billion by 2033. CAGR of about 7.35%.
Still solid growth. And Nigeria is leading the way on the continent in this space, growing from around 0.7 billion to over 1.5 billion.
Okay.
South Africa also showing strong growth, projected to hit 1.5 billion by 2033. That's up from about 0.6 billion. A CAGR of nearly 7.8%.
So Africa is obviously very diverse economically. What are the main things driving this expansion of financial services like cash advances and sort of inclusion across the continent?
Your sources really point to the incredible impact of mobile money and agent banking networks across Africa.
Right. M-Pesa and similar services really transform things.
Absolutely. For vast numbers of people, a physical bank branch might be miles away, maybe inaccessible, but almost everyone has access to a mobile phone.
Sure.
So cash advance services are basically layering onto that existing mobile payment infrastructure. They're providing access to credit, maybe for the very first time, for millions of people. It's fundamentally about bridging that financial inclusion gap.
So filling a really basic need.
Exactly. The growth is driven by that need for quick, reachable funds where formal credit might be, well, underdeveloped or just not available. It helps people manage daily life, start tiny businesses, handle emergencies.
Okay, so we've gone around the globe. Let's try and synthesize this, bring it back to the big picture. What does all this regional data tell us overall?
Well, I think it paints a very clear picture.
Yeah, it seems the overarching message is clear. This global cash advance services market is really set for strong, continued expansion.
Definitely. And the drivers, as we've discussed, are pretty consistent themes.
Yeah.
That rising consumer need for immediate cash. These rapidly evolving digital financial systems everywhere.
The tech backbone.
Right.
Yeah.
And just widespread digital adoption across almost all regions. But the pace is different.
Right. North America and Europe, while huge markets, seem more maybe mature, stable. Growth is steady but not explosive.
Exactly. They're established markets. Whereas Asia-Pacific, South America, the Middle East, those regions are really showing rapid uptake, high growth potential. They're catching up fast and in some ways leapfrogging.
And it really seems to be the emerging economies the sources kept highlighting, places like India, Argentina, the UAE.
Yes.
They seem to be really at the forefront of this shift, fundamentally changing how people get that short-term financial help. It's like innovation meeting a very real everyday need.
Couldn't have said it better. That's the core story here.
So there you have it. Hopefully in a short amount of time, you feel much more informed about the global cash advanced services market. It's a really significant trend, and it's clearly moving fast. We hope this deep dive gave you some valuable takeaways.
And maybe something to chew on as you think about all this data. Here's a thought. Given this growing reliance globally on getting funds quickly through digital means, how might this actually reshape behavior?
Good question.
Not just how individuals and businesses borrow, but maybe how they plan, how they spend, even how they think about financial stability itself over the next decade. What are the wider implications?
That is a fascinating question to ponder. What are the broader societal shifts? Okay, well, thank you for joining us on this deep dive. We really encourage you to keep exploring these topics. Welcome to the Deep Dive. Today, we're taking a closer look at the global cash advance services market. And while, many of us might still think of cash advances as this sort of last resort thing, what's really striking is how it's, evolving. It's becoming surprisingly integral to daily finance for millions. So we're going to unpack the key dynamics, the drivers, the challenges too, and the future trends, all based on some really insightful market research.
Yeah, and it's a fascinating space, really. It sits
Yeah.
right at this like intersection of tech,
Yeah.
changing work patterns.
Right, the whole gig economy thing.
Exactly that, and just this rising need for financial flexibility, often immediately. So our goal here is pretty simple: cut through the noise, give you the most important insights, help you get not just what's happening, but why it actually matters.
Okay, so let's dive straight in then. The why now. What's really fueling this explosion in cash advance services? Is it purely economic pressure, or is there more to it?
It's definitely multifaceted. I mean, the biggest factor has to be the sheer demand for immediate liquidity.
Right. Money needed right away.
Precisely. Think about it. Someone faces a sudden car repair, maybe, or a small business needs to bridge a gap between payments.
Yeah, short-term cash flow issues. Happens all the time.
It does. And they urgently need fast funds, usually without collateral. Now, traditional loans.
Oh, yeah. Slow, cumbersome, mountains of paperwork.
Exactly. Cash advance services, they sort of step into that gap. They offer almost instant access. It's not just convenience. It's enabling people to handle surprises.
And it's not just the need, is it? It's also how easily that need can be met now, the technology aspect.
Absolutely. That's the second big piece. The rapid growth of fintech and these digital lending platforms, huge catalyst.
Because everyone has a smartphone now.
Right. Smartphones, widespread internet.
Mm-hmm.
I mean, these platforms can offer really seamless access, often just through an app,
Makes it incredibly easy.
And many are using AI, machine learning.
Ah, right, for credit checks.
Yeah, to assess creditworthiness basically in real time. This cuts down approval times massively. And crucially, it broadens financial inclusion.
How so?
Well, it helps these services reach people who are maybe underserved by the old banking system.
Okay, got it. And then there's the workforce shift you mentioned earlier.
The expanding gig economy and freelance workforce, yeah, that's adding serious fuel to the fire.
It's not niche anymore, is it? It's a big change in how people earn.
It really is. Traditional jobs, stable monthly paychecks.
Yeah.
That's changing for a lot of people. They have more flexible, but maybe less predictable income.
So cash advances become a lifeline.
Kinda, yeah. Especially like advances on future earnings for gig workers. It helps them manage daily costs, maybe support side projects, or just, handle setbacks when a client payment is late.
Right.
So if you connect those dots, what's fascinating here is how these shifts, societal, technological, they aren't just happening side by side. They've sort of combined to create this perfect storm, this unique environment for cash advance services to grow.
A fundamental change in need, met by new tech.
Exactly.
Yeah.
A distinct financial need met by these modern digital solutions.
But, okay, it can't all be smooth sailing. Every market has its challenges, right? And this is where it gets really interesting.
Definitely. There are hurdles.
And one of the big ones, you hear about this a lot, is the cost. The interest rates can be really high, right? And sometimes hidden fees?
That's the primary concern, yes. Elevated interest rates and sometimes a lack of transparency about all the costs.
Which can be dangerous.
It can. While they offer that instant cash, the high cost can become, well, a double-edged sword. It can potentially trap users, especially, like you said, those with maybe limited financial literacy.
Into debt cycles.
Into cycles of debt, yeah. And this hasn't gone unnoticed. It's led to growing scrutiny.
Okay, and that scrutiny probably leads straight to the next challenge, the regulator stepping in.
Directly. That leads right into stringent regulatory oversight. Governments, financial authorities. They're tightening the rules globally, mostly focused on consumer protection.
What kind of rules are we talking about?
Things like putting caps on interest rates, forcing clear, transparent terms and conditions, setting up proper guidelines for who's eligible to borrow.
Which sounds good for consumers.
It is vital for ethical lending, absolutely. But it also creates this tension, right? Because these rules can also limit the operational freedom for the service providers.
And maybe their profitability.
Potentially, yeah. It's a really delicate balance for regulators. How do you protect people without stifling the innovation that could actually help them?
Tricky. And then there's risk for the lenders themselves, isn't there? Default risk.
Huge risk. Defaults and even fraudulent borrowing. Because these loans are typically unsecured, right? And they're issued so fast.
So higher chance someone won't pay it back.
Significantly higher than traditional loans, yeah. Think about fraudulent applications. People may be misrepresenting their income or just inaccurate credit checks despite the AI.
Ouch. That could really hurt the lending company.
It absolutely can destabilize their finances, strain their resources. It's like walking a tightrope for them, managing that risk while still providing the service.
Okay, so we've got the drivers, we've got these pretty significant challenges. Where does this leave the market? What's next? Are there positive trends emerging despite the hurdles?
Oh, definitely. There's some really compelling innovation happening, shifting things towards hopefully more responsible lending.
Where are you seeing the most exciting developments?
I'd say in how companies are assessing risk, that integration of AI and alternative data for credit scoring, it's moving beyond just the old credit bureau checks.
What kind of alternative data?
Things like analyzing behavioral patterns, maybe bank transaction history, even like anonymized social signals sometimes.
Yep.
The idea is to get a much more accurate picture of credit risk.
Which means better decisions.
Better decisions, hopefully higher approval rates, but also it helps bring in people who were maybe excluded before, people without a long credit history.
Expanding access again. That's interesting.
Making more inclusive, yeah.
Yeah. And what else? I've heard about links to payroll.
Yes, that's another huge trend. The integration with payroll systems, often called earned wage access, or EWA.
Earned wage access.
Right. Basically, it lets employees access a chunk of their salary before the official payday.
Okay. I can see the appeal.
It's getting really popular in HR tech, in enterprise solutions. For many workers, it's not just like a convenient perk. It could fundamentally change the whole idea of a paycheck.
From getting paid once or twice a month to more on demand.
Sort of, yeah.
Yeah.
A more dynamic model. It empowers people to manage expenses without needing high-interest loans or going into overdraft.
That seems like a positive shift. Less reliance on potentially costly options.
Exactly. It's shifting the paradigm of how people access and manage immediate funds. And tied closely to this, there's a growing emphasis on financial wellness tools.
Within the cash advance apps themselves.
Yes. To build trust, keep users engaged.
Yeah.
Platforms are adding features like budgeting advice, maybe debt tracking tools, even personalized financial coaching.
So they're trying to be more than just lenders.
That's the goal, to help customers borrow responsibly, understand what they owe, and build better financial habits over time, evolving into more holistic financial partners.
Right. Makes sense from a business perspective, too, presumably. Responsible borrowers are better customers.
Absolutely. It's about sustainability for both the user and the platform.
Okay, so let's try and sum this up. The global cash advance market. It's moving incredibly fast, driven by tech, by changes in how we work, and this real need for flexible money solutions. Yes, there are serious challenges. Regulation, protecting consumers, managing risk for the lenders, that's all very real.
Definitely.
But if they get the mix right, innovation, responsibility, really focusing on the customer, the potential seems huge. It could genuinely redefine short-term finance.
I think that's a fair summary. It's a space undergoing significant transformation.
So as we wrap up then, here's a final thought for you, our listener, to mull over. How might this increasing integration of things like earned wage access directly into our payroll, how might that fundamentally change our own personal budgeting habits in the long run? And what new responsibilities does that place on employers maybe, and on the financial services companies offering these tools? Something to think about as these trends keep evolving. Thanks for deep diving with us today.